Hi and welcome back to Talking Markets. Today we're joined by Tom Light, co-founder and research director at Regency Capital. Welcome to the show, Tom.
Great to be here.
So let's dive straight into the beginning of the year. What's changed in the economic landscape and how has it affected the markets over the last 6 months?
Yeah, so we're sort of half-time. I think UK investors will be feeling like they're 2-0 down really against their US counterparts because the FTSE has underperformed the S&P, which has had a roaring start to the year. If we look at the overarching theme of the first half, it's been this end of cheap money, and that has played out with stubbornly high levels of core inflation. I think some of the key reasons why the UK has underperformed the US is that this core inflation level has been so stubborn, and the Bank of England's lacked a bit of sort of credibility in its forecasts and rhetoric. Other themes that have obviously overlaid on top of that overarching theme has been the opening up of China, and then we've had the Silicon Valley banking crisis, and then we've had this return in some pretty strong tech earnings in Q2.
So looking back, what sectors have kind of overperformed and underperformed?
Yeah, so in the UK market, it's been a real split pack. We've had strong performances from tech driven by the AI boom. We've also had strong performances from financials because they're enjoying higher interest rates, the banking wobble to one side. And we've also seen a bounce back in travel and leisure, bouncing back from COVID. So in terms of underperforming sectors, though, real estate's had a pretty tough time of it. They've struggled with that landscape of monetary policy and the impacts that that's having on the mortgage market. We've also seen quite an underperformance from telecoms, with the likes of Vodafone performing really poorly in the first half. We've also seen an underperformance from healthcare stocks as well, because higher borrowing costs is sort of leading to a bit of a contraction in research and development.
Looking forward then to the kind of the next 6 months, inflation aside, what are the other kind of key things you're looking at that the market wants to see over the next 6 months?
Yeah, and the market really needs a better grasp over where core inflation is going to plateau, especially in the UK. Once it sees that, then the Bank of England can claw back a bit of credibility and the market can start to price in the pain that consumers are going to feel, especially as we head into autumn, winter. Aside from that, we also have higher levels of geopolitical risk. Markets will be looking for a de-escalation in those tensions between the US and China and how that's playing out in the Ukraine war situation. And then on China, on a separate point, there is the potential for Chinese stimulus and how this could affect European manufacturing stocks, because they're huge clients of China. Some of those stocks may get a real boost in the second half.
So where do you see kind of value coming from in the next 6 months?
Yeah, I think there's something for everyone really in the second half of the year. Certainly for investors, if you're looking for momentum, there's plenty of momentum to be had in tech and travel. If you're looking for speculative value, then of course those hard-hit sectors of the likes of real estate, they might start to turn around if we start to see some clarity over inflation. I think there's quite a nice middle ground of value to be had in sectors like banking and mining. They're trading on very undemanding forward PE ratios and they're offering great dividend yields as well. If you're a short-term trader, of course, there's always a plethora of opportunities to be had because you can play the long and the short side. So, one example of using that would be something like a banking pairs trade. We would expect international banks to outperform UK-focused banks over the second half. So creating a pairs trade out of that, going, long something like a HSBC and short something like Lloyd's, that's the way you could construct a decent-looking trading opportunity for the second half.
Great stuff. Okay, well, thank you very much for joining us, Tom. And let's see what happens for the rest of the year. And let us know in the comments what you think is going to happen in the second half of 2023.